When to buy a home. That's what we're going to cover here. FHA foreclosure mitigation is coming to an end, but they are going to be replacing that with a different program. And I'll cover that with you. Mortgage applications are increasing. However, refinance applications account for almost 49% of all applications last week. So they're not really telling you the full story with those mortgage applications increasing. Of course, interest rates are falling. A lot of borrowers can get into the 5 percentile now, or 5% interest rate. And what we're going to take a look is inventory is starting to elevate itself here slightly in September. And we're going to take a look at all of this. So if you're not a subscriber, make sure you subscribe. That way you're notified when new videos drop. And smash that like button. It'll help me get this video in front of more people. And when you do need a real estate agent in Utah, you know who to call. Dinko The Realtor has your back. My contact information is down below in the description. Now we're going to take a look here. The can kicking seems to continue to some extent. We're going to have to see how this unravels. Right here, if we take a look, we see that big changes are coming October 1st right here. FHA is getting rid of the COVID mitigation program where they would drop the mortgage payment by 25%, tack it on the back end of the mortgage, and they would do this for 3 years, drop that payment by 25%, and that would only come due if the borrower refinances, sells, or pays off the mortgage. So they would just tack it on the back end. People could reapply in 18-month period. We do see now that they increased it to a 24-month period. So again, free market capitalism isn't fully in play here. We don't know how long this program is going to take to, roll out, and what kind of onboarding period they're going to have, like they did with the student loans. Remember, they had essentially a year of a ramp on period, so they might do something like that here as well. But we see that it is a 24-month period. Now, one thing is the COVID-19 mitigation program for the FHA borrowers was much easier to obtain because it had COVID guidelines in there that allowed for people to qualify much more easily, and the guidelines were very, very loose. We do see that they are now tightening that up a little bit. They're going to have a trial period plans, permanent loan modifications, and partial claims. So there's going to be permanent loan modifications. So you can see that they're not letting the free market play itself out 100%. And we kind of anticipated that that would happen. So in commercial real estate, that's another big one. And from everything that I've gathered, that I've been able to gather, it seems that they're going to kick that into 2026. So they kicked it from 23 to 2024, then to 2025, and now everything that I've been able to find, they're essentially wanting the economy to slow bleed. They know what's happening. Mortgage applications right here, refinances account for 49% of all applications. So yes, interest rates dropping essentially somewhere into the upper 5%. We are seeing an increase in mortgage applications, but a lot of that is also refinances, people that just have to refinance. And I'll actually get into a story here and let you know it's not indicating that everything is great, but the reason they're doing this can kicking, and these regulators for this commercial real estate, I don't know how they're doing it. They're just looking the other way, and they're letting these banks, by looking the other way, keep this, these bad loans, these bad assets on their books and show it as a good asset. So the regulatory board is not regulating these banks and saying, hey, you have a bad paper, you have a bad loan on your books, and they must be eating the interest rate because interest rates are much higher than what people were refinancing their commercial real estate loans. So essentially, no free market in that. It's indicating that that's probably not going to just unravel itself here. And we do have that mitigation, 49% of these applications. And look, I have 6 or 7 active listings right now, not the ones that are under contract right now. So last week, I would say maybe a slight pickup. And I've talked to real estate agents, and nobody really noticed a big increase in the amount of showings on their listings. Now, when this video drops, the Fed is going to cut rates pretty soon. That's the anticipation. So we'll see if those headlines spark any additional buyers. However, out of those 6 or 7 listings that I have right now, I took another one today that's going to be active. I have 2 more listing appointments that I'm going to go on and take those listings. But Monday and Tuesday, zero showings across all of my listings. I had a couple over the weekend, but 0 on Monday and Tuesday, and so far 0 heading into Wednesday. Actually, one of the sellers called me today or Tuesday when I'm recording this here at nighttime, but they called me on Tuesday and they said, hey, we need to make an adjustment. I think your initial analysis was correct. Seems these mortgage rates are not bringing us the activity. We had a pretty good amount of activity the first 10 days and then it just died down. So the seller wanted to cut the list price to kind of more where I was recommending. And I did have last week more activity, and I could say that's maybe due to the mortgage applications. However, there was a $50,000 price adjustment on a listing. I also, the week prior to that, adjusted another listing $50,000. So I could say, wow, these interest rates coming into just the upper 5% is really, really causing buyers to just flood the market. Well, I'm pretty sure that it's that $50,000 price adjustment that's doing that and not the interest rate coming to 5.9% or 6.1%. So that's kind of the story that I have for you guys. Refinance applications. Now I'll get actually back to that, but I want to why this is so the end of the student loan relief reshapes the auto lending. And this right here, I shared the last week on the video, but this is going to actually show us why, even though mortgage rates are coming down, why the floodgates are not opening up. Well, we see that 2 million auto loan borrowers had a student loan delinquency added to their credit file in Q1. So if that was just quarter one, January, February, March, we could say that there might be 5 or 6 or 7 million borrowers now with the car loans that had the student loans added back to their credit score. And we see that a lot of them had a 100% or a 100-point drop overnight, and 18 to 29-year-olds, nearly 30% of them experienced 1 out of 3 that 100-point decline. Now, I want to show you here why that's important. Right here, if we take a look, the scores didn't make these consumers riskier. They revealed a risk that had been hidden for several years. And this is something that I was indicating that was going to happen. How many people bought houses, got mortgages, bought cars, got car loans, where the student loan was removed? It was frozen, right? The repayments were not, so they removed it off the credit score. People's credit scores jumped up. They were locked up in a house for a year and a half. They saved money, record savings. They got stimulus money. They paid off a credit card, paid off another credit card. All of a sudden, they have some down payment saved for a house. Their credit score all of a sudden is in great standing or in pretty good standing where they're able to qualify for a house. And the lender can't even tell that they were delinquent on their student loan just maybe 6 months ago or a year ago, because that risk that it was hidden. So essentially, that's what happened right there. Reversing much of the credit lift observed during the payment pause, a period that temporarily boosted average scores by sidelining many riskier borrowers. I'm telling you guys. And if I'm blinking here a little too much, it's about to be midnight, or it is midnight as I'm recording this. So bear with me. I'm trying to get this video for you guys. I got a busy day on Wednesday, but I had a busy day on Tuesday, so I haven't been able to record, and I'm trying to get this out for you guys. So if you haven't yet, smash the like button, hit the subscribe button, because nobody has your back like Dinko The Realtor. Contact information is down below, but we're seeing that impacting. And right here, if you take a look at the inventory, you actually see this blue-purple line. You see that it is actually slightly trending upwards in September, which means inventory potentially has not stalled, and we might see that inventory gain. Now, I think it was 2 weeks ago where there was a spike at the beginning of September that I showed you guys, and there was a really big net gain in that week. Well, that did not sustain itself. We did not see that big net gain in inventory week after week. So now it is kind of modest, but we are seeing nonetheless inventory right here, much elevated over years past and still trending upwards here in September. So I'm going to give you guys a recap here again. Smash the like button, hit the subscribe button if you haven't. So the FHA mitigation for foreclosures seems like it is finally coming to an end here, September 30th and October 1st. There is another program that is going to be rolled out to essentially prevent or delay these FHA foreclosures. So when you want to buy, I mean, right now, sellers are struggling, builders are struggling. So if you are looking to buy, you could get pretty good deals right now. This can kicking with commercial real estate into next year, potentially these foreclosures. I can't say that we're going to see, I mean, like I said, until we see something most likely break in the economy, and we do see that the job data has been bad lately, but until something breaks in the economy, we're probably going to have those roller coaster rides of the ups and downs for home prices. And we're seeing that they're again putting that mortgage applications are on the rise, but we also see that a good chunk of that is refinance applications, student loans. We see that there's millions of people that are now having student loans coming up that have mortgage or car loans and probably mortgages as well. And we see that this right here, essentially, they hit it. It was a hidden for several years, and these borrowers were able to get these loans. And we see that this inventory is slightly elevating right here in September. So, hey, when you do need a real estate agent in Utah, if you want to take advantage of the market right now, give me a call. We can do that. If you want to wait, you might have to wait until 2030. I'm not 100% sure. They seem they want to slow bleed. They don't want to give us a free market. They don't want to give us capitalism right here. But hey, you can wait as long as you want to wait, or if you want to get the best deal, give me a call. Contact information is down below, and I'll make sure to negotiate you the best deal. There have been people, numerous people, that have seen my negotiating skills that have reached out to me from YouTube, and we have gotten great deals, and they've even backed out because my inspector has found some issues, and then the next buyer actually pays more than they did. So yeah, hit me up when you're ready.